Why do we all need to be concerned about this? Because it has a very high take-up rate for a federal program, one of the highest take-up rates of any federal program that's out there. So it's estimated nationally that 80% of folks who are eligible for EIC claim. But it's also estimated on a yearly basis that anywhere from 20 to 25% don't claim the benefits. And so outreach is needed to spread the word about the importance. That unclaimed amount would have represented $10 billion nationally. So a lot of money left on the table again. This will make Jackie very nervous because the researcher is sitting behind her. But we crunched some numbers, and Jackie's really good at crunching numbers because she's a CPA. And we wanted to know, well, what would that be on our local level? You know, what would that, and it's difficult for the reasons that Julia talked about earlier because we're looking at different data sets. So we might be looking at the Brookings Institute data set for people who actually filed their taxes, and we have to look at the census data for folks that fit into subgroups. We have to go between these two data sets. But our best estimate, very, very low, very conservative, is that if 4% of folks who didn't file in our area, not that 20%, but 4% of folks, we would be leaving $500,000 on the table in the Appleton area alone. At 20%, that's $2.8 million in our area. So we know that we've been doing a good job. You know, 11% of folks in the Appleton area are EIC filers and have received those valuable credits, but we know that there's persons who are not receiving those credits. And why do people miss out? The biggest reason that folks miss out is they just don't have the burden to file a tax form. So they literally have income that's lower than the burden to file a tax form, so they don't file. So they're not in the system. But there's also other groups that miss out. One of the things that makes it difficult to look at data analysis about earned income credits and who files and who doesn't file is it's a moving target. It's not the same consistent, set of folks. You know, kids get older and all of a sudden you don't qualify for earned income credit. Kids get born and all of a sudden you do qualify for earned income credit, at different levels. And people's earned income fluctuates. And so, a lot of people may not know because they've never filed before. And we do know, I'm not going to burden you with some of the subset analysis we know, but it's kind of the rule of thirds, that those folks that don't file, those 20% of folks that don't file, fit in one of three different buckets. In general, though, we know that these are the populations that are very vulnerable to missing out. And I think, Thomas, you started us out with, the populations that we're concerned about, the populations that we work with out in our agencies, and I think you all would recognize these are your consumers, these are folks that you're serving. And so how can you help these persons claim those valuable credits? It really needs to, want to get you fired up about, doing this work. So besides the credits, okay, very important because there's money left on the table. There's money left on the table in your community for low-income, working families, individuals, and there's money, that the community could really use for that local economic development and getting that good multiplier effect. But besides that, we need to be doing this work because tax time is ripe for predatory practices. I mean, it's just, there's so many, and we're not indicting all commercial preparers, but a large percentage of folks who claim the EIC, you can see here nationally, 70% use commercial preparers. So what's the problem with that? Well, there's commercial preparers and there's commercial preparers. I'm not going to use any names, but we know those big national firms. You've got them all in your communities that are really good about getting their marketing message out. And they've got some products that I'm going to talk about that are really ripe for predatory practices. But everybody's getting into this game. So it's not just the large tax firms. It's also your auto sales. Come buy a used car and we'll do your taxes for you. It's your used furniture retail. Let's rent some furniture to you and we'll do your taxes for you. I listened recently to a person with a SPEC office. SPEC is the horrible acronym for the IRS office that supports all of us out there horrible in the sense I can't ever remember what it stands for, but it's catchy. They support us all out doing the taxes in the field. And so this man was from the IRS office in Atlanta, and he said every year is like a contest with the IRS. They're like, what's going to be the worst gimmick we see for doing taxes? And so it was get your windows tinted and we'll do your taxes for you. So yeah, I see some heads like either shaking or perplexed, one of the two. But yeah, first of all, they're not free. They're ripe with all these hidden costs. And second, do you really want the person who's tinting your windows to do your taxes for you? I mean, we like to stay in our core competencies. And so I'm going to talk a little bit about some of these predatory practices that are out there.